Welcome back, Internet Capitalists, to episode 19, I believe, of our podcast. Off to a good start, and we have to start the show, as we always do, talking about my Indiana Hoosiers. They moved to 5-0 this week with a big victory over the Maryland Terrapins. 4 turnovers, negative 9 yards after those turnovers.
Yeah, that's I guess Indiana looks really good is my comment. Maryland's not a bad team. They had some blunders. Indiana had those turnovers, as you mentioned, but overall they're looking pretty good. And they were not in the top 25 this week, but as of after that Maryland game, they're ranked number 23 in AP poll, I believe, and 24 correct. In the coaches poll.
Yeah, so we're pretty fired up about that. Got a game against Northwestern next Saturday, so hopefully we keep climbing. And if we beat Northwestern, we will be bowl eligible for only the 17th time in program history. And it's been 57 years since we've been 5-0, and it's been 1907 since I believe we've been 6-0. So we're moving down the right path there. The other football news yesterday, Pittsburgh Steelers defense let us down the first half, I think.
Yeah, not much to say there. A little disappointing. If anyone's a Colts fan on here, you have to explain to me why you do this on every touchdown.
I don't know what that is.
It's very strange. It's.
Is it milking a cow?
I don't think, because it's a colt. It is a stallion. It's a horse.
You don't milk horses.
Maybe they do. I don't know.
I'm from Indiana. They don't milk horses.
Well, that's why I wanted an explanation.
Okay, fair enough. Also, I hope all of you have seen by now our interview with James from Mo Network. Really thankful for him, and I think he dropped a lot of great alpha about AI-Fi, and actually some of the most viewed shorts and clips of that have been about the VE mode token and the tokenomics that's going to come out of that.
Yeah, we can talk about it if you want. I'm really bullish on that model because a big issue with L2 tokens have been the criticism, and it's valid, I believe, that they don't really do anything. Most of them have voting rights in some sort of governance system, such as Optimisms. But this is really limited, and there's really no value capture from the token in terms of its structure. So having this VE aspect, which has been shown to work for DEX tokens that have the same problem, to kind of give it utility, give it some inherent value in power in terms of where you're directing emissions and where yields are going, is huge. And I think doing that at the L2 level will have similar, if not greater, results than for the DEX tokens. So I'm bullish on that.
Absolutely. And just so the audience knows, we're going to try to keep our focus on this AI area. Going to try and talk to some folks that are actually building some of the core tech that's going to be used on Mode. So look for that coming up probably in 2 or 3 weeks. We're going to interview another probably the largest or second largest protocol on Mode this upcoming week, and talk about their expansion plans, which is going great. So we've got lots of cool stuff coming there. No,
I just want to last note on that. I really think that the next era of crypto really will be defined by this AI integration. I think the people building at that intersection are right, because it's likely that AI is the defining technology of this century, and then crypto is a close second. And it can really enable AI to have its own native financial system. It's a system it understands, and it's a natural fit. So I think that's going to be what defines crypto moving forward, and where like the real unlocks are going to be, because we've seen all this experimentation. We really bootstrapped it, these blockchain networks with human users, speculation on tokens. And then I think it's going to be clear in retrospect that it followed this evolutionary path to being the AI native financial system. So I think that's what we see, and that's why we're focusing on it, because I think we're starting to see the early stages of that transition.
Yeah, absolutely. And just before I got on here, I was on the Codex Club talking about Conclave's Codex AI intent-based interface at the front end. And again, that's on, well, at least partially, it lives on Mode Network and fits in the same narrative. And they're really confident that they're going to try and move straight to retail on this. And it seems like they're probably within a month or two of coming out with their alpha system, and probably say 3 or 4 or 5 months from getting that into, I'll call them naive users' hands, which is, same idea, really cool stuff.
Yeah, I think that'll be good. I haven't gotten to use the product, no beta use or anything like that, but I'll be an early user if I can be, as soon as I have it. and an early user of all these new AI projects that are being incubated and launched over the next year in Mode Network and other networks that are having these hackathons, these incentive programs for developers to build these AI apps.
Yep.
So I think that's where a lot of the alpha is going to be, because right now people are speculating like crazy on, your household AI tokens. There's the Artificial Superintelligence Alliance, the merger between the three tokens. There's BitTensor, Tau. There's others. And you can do that, but yes. I think getting in on the ground floor of this next era of DeFi times AI wallet providers, all these projects is a good move.
Absolutely. And I need to look into like what the AI alliance thing is, because that sounds kind of sus to me, but maybe it's not. I don't know.
I think they just merged. Well, it was 3 projects, right? There was 3 legitimate projects. I was familiar with Ocean Protocol, which was like a tokenized data marketplace, basically. And it was a good idea, and there was a legitimate team. I do think, however, that this merger was really just to capitalize on the hype, and so they make a token that is more valuable than the sum of their parts, and that was the motivation, as opposed to like integration or a merger that actually made sense technically. So,
gotcha. Yeah. All right, that makes sense. Well, listen, we do not have your normal slides here. Oh, maybe we do.
Pull up just pull up the newsletter.
All right, I'll pull up the newsletter.
We could go to last Thursday's midweek newsletter with a bunch of news stories, and we can go over those.
Well, I want to go over the markets. I got a whole list of stuff I want to talk about.
That's fine.
All right, let me pull that up. Let's see.
Oh, we got to talk about that. We got to talk about the
it's on my list. On my list, bud. It's on my list.
We're mentioning Nick Carter's recent article about how the U.S. government basically targeted Silvergate Bank. So we're going to give some opinions there and on his article.
Yeah.
Sounds
good. All right. This week's markets. This was as of today.
Yeah, today? A few hours ago. We actually traded down a bit. Bitcoin broke $65,000 last week. Then over the weekend into early this week, which is September 30th, Bitcoin and the rest of the market traded down a bit. I believe there were either the Fed minutes came out or some additional details. And basically Powell was saying that the remaining rate cuts will not be as aggressive as that 50 basis point cut. So maybe that was the cause, but I'm not sure.
Well, that's correct. And I'm looking at my watch now, and the markets are back up again based on that. So I read the article. He said they will not be 50 basis point cuts, but there's definite sentiment about continued cutting.
I saw there's one Fed official who is particularly dovish, Goolsby or something of this effect. And Goolsby is just like, we're cutting to zero. We're going all the way down. So I did read that. So I think overall optimistic from a monetary policy perspective.
Yeah, there's predictions now on Polymarket or something. The final rate it settles at late next year is around 3.25.
Yeah,
overnight lending rate. Yep. Hey, so on this note, David Hoffman had a tweet where he basically likened where we are now to both the 2020 and 2016 bull markets, and we're ready for this next leg up, and hopefully these macroscopic indicators take us there.
Yeah, obviously neither of us were around for those cycles, so I can't really speak to how similar the market conditions, the market sentiment is in that respect. But that's what a lot of the crypto veterans have said, and I think they're right. I generally think it's a bullish setup. The cycle's progressed slowly so far, and we've gotten little pockets of mania. Like there's the meme mania. That's kind of resurfaced a bit again, and then the whole Solana meme generator pump.fun, and that's really been like the main mania that could be likened to previous cycles in terms of like maybe retail adoption. I don't like calling it adoption. People call it adoption, but just speculative use. And I think we will see that again, driven by actual more productive use cases and a renaissance either in DeFi or in this AI tech. So we'll see. But overall, bull setup. Fundamentals aren't going anywhere. Feeling good.
Hey, question. Pump.fun, is that related to Pumped Up Kicks by that band?
No.
It's not related? Okay.
No. What in your mind, what would have been the relation there?
It's kind of, they rhyme.
They rhyme. Okay. Yeah. I was just curious.
Well, hey, let's get back to crypto. Right. Inside the Biden administration's plot to destroy Silvergate and debank crypto for good.
Yep.
Now, I'm going to just turn this over to you. You know a lot about this, more about this than I do. So I'm going to scroll through this real quick and then get us back on the main screen. So go ahead.
Yeah. So basically, I'll just give a brief overview. So Silvergate was a key bank for crypto companies over the last 3-4 years who have basically allowed institutions to transact with each other. And crypto is 24/7. You can trade coins all the time. Markets don't open and close.
Mm-hmm.
So big institutions need a 24/7 settlement network. And Silvergate had the most extensive by far here in the United States. And that was called the Silvergate Exchange Network, the SEN.
Mm-hmm.
This was a key piece of infrastructure. It was widely used, all of that. Okay. So that's just a little bit of context. And then basically what happened, you remember the regional banking crisis in 2023? Yes. So basically what happened is all these banks were losing a bunch of money because they took in deposits and then they bought these long-dated government bonds and they were basically profiting off the spread there. But then whenever the interest rates went up because of the very aggressive hiking cycle, the market value of those securities went down, basically resulting in a bunch of unrealized losses for these banks. And that's why a bunch of them went bankrupt. And
as people tried to take their money out. It was a bank run. Otherwise, it wouldn't have mattered.
Exactly. Because whenever people try to take their money out, they have to sell their assets for cash. But if those assets are very much lower than the principal value that they would receive at maturity, then that's a problem. And that's where a bank run can happen. That's what was going on. But Silvergate was kind of implicated in this. They were also implicated. They banked FTX and they had relationships with all the big crypto institutions. So they were kind of caught up in this. They were losing money. And this was all happening at the same time. So it was generally bad. And because of this, they were under scrutiny of the government, of the various regulatory agencies that govern banks, like the Fed, like the SEC and others. And what happened basically was that the government used this opportunity to come after Silvergate, is what Nick Carter argued. He basically said that I forget which regulator it was, but behind closed doors in backroom dealing said, we're capping your crypto deposits at crypto exposure to essentially 15% of their total assets, which is completely arbitrary. That's not actually a rule that they can impose, but they basically said, do this or else there will be consequences.
And that was not written. That was
it was written.
Verbal.
It was verbal to the executives of Silvergate. And because of this, that basically forced them to shut down their business. Their biggest business was crypto, and they couldn't. That wasn't tenable in the current climate. When otherwise, if they were allowed to have more than that, then they could have stayed afloat during this tumultuous time. And this, according to Carter, was part of the larger plot, basically, for like the Biden administration and Elizabeth Warren and senior Democrats in Congress to come after crypto, because they tried, if you can cut off basically these banks and not let crypto companies get banks, then they can't operate in the United States. And so essentially it was a targeted play and they were coming after crypto companies. So that's the too long didn't read. But it's a really good article and I suggest everyone read it.
Yeah, absolutely. And when you and I were talking about this late one night after I'd read it, my first comment was the executives here, this company grew from literally a very regional small bank to a gigantic, comparatively mid-sized regional bank very quickly. And I think that there were some classic banking mistakes. The whole treasury purchase thing was a classic mistake that made them pop their head above and get regulators' attention. And once that happened, they got sucked in the rabbit hole. They were in the crosshairs and they paid for it. We talked about this, and I always wondered why they didn't immediately call their senator, their California senator or congressperson to help them out, because it was clear that a lot of this pressure was not initially, at least, coming from regulators. It was coming from Congress and other Congress people. I don't know if they tried that, they got their back turned on them or whatever, but that seems like another mistake. But clearly, the U.S. is targeting these institutions. Anecdotally, we talked about this an hour ago. We were talking to 5 people to interview, and of the 5 people we're interviewing, 4 of them were out of the country.
Yeah, it's just
it's crazy.
Yeah, just pushing people. I'll agree with you on the first point, is that a lot of these banks did the same thing. Actually, throughout the whole period, throughout COVID, and to kind of help handle inflation and get people to buy government bonds, the government basically mandated that these regional banks hold a certain amount of treasuries. They made them buy them, and then it made them go bankrupt. That happened. Yeah. So that's the one issue. And then the second thing is the real issue is this verbal, implicit basically command from the regulators that they have to have no more than 15% crypto deposits. That's just completely arbitrary. That's not something that's written. And then the other thing here is that they basically told them this in a way that made it illegal for them to publicly announce it.
Right.
Which was a misuse of that particular reporting mechanism that the regulator used. Yeah. So that's a problem. But in general, I would say it was very revealing. Nick Carter's article was very good, and hopefully this thing doesn't keep happening. It looks like we might have turned the corner here, but these type of things is why so many founders are overseas, because it's just hostile here.
And, continuing down this thread a little bit more, about a month ago, maybe, United Kingdom, their Supreme Court, or whatever the heck it's called, basically approved the case or a law or a regulation that held that crypto was a separate defined asset class, I guess like other asset classes in the UK, which I think is a big win for that. And, that's the kind of thing maybe that can happen here, or at least it gets accepted as a true asset class with some legal framework around it, so that you can't just arbitrarily make these decisions up. Yeah. And the second thing we talked about was the Chevron deference. Yeah. Should help prevent regulator overreach.
Yeah, 100%. I think in the short term, regulators can still make it difficult for companies, but my understanding of that is that if a regulator came down with an enforcement action via their interpretation of the law on, say, a crypto company, then that was basically the law from there forward. That's what the courts had to go with because they're deferring to the regulator's view. That's no longer the case. So that's definitely good, I would say. Last thing here is that I just think that this is just a great example of, you're talking about in the EU and then also in the UK, they have a framework because it's like a parliamentary system. They just make laws. It's very easy. Here it's harder because it's harder to get laws through because we have these checks and balances. But the issue is that all of these, the fourth arm of the government, as they call it, these regulatory agencies, have basically gone out of their way and have made all these rules that are effectively laws because we can't get any actual legislation done. And that has definitely hurt crypto over the last 3-4 years. So eventually, once we get laws done, I do think they'll actually be better than these other places. But in the short term, it is hard for us.
Yeah, great. All right, let's move on. Hey, one thing that I think is kind of cool that you're developing on your own here is the sectors that are in the newsletter, the Internet Capital Crypto Index, ICCI, that's coming on. And what's your intent with that? Where's that going?
It's really just to help people keep their pulse on which sectors are performing well on a week-to-week basis, who the biggest gainers in each sector are, and just what to keep your eye on, because crypto's gotten big enough where there's all these different sectors. There's DeFi tokens, there's L2 tokens, there's gaming tokens, there's AI tokens, there's social tokens and projects. So all these different sectors, it's hard to pay attention to everything, and just having that added context will be really helpful. And I'm still developing the methodology for how to exactly track that, maybe what the starting date for the index is, how we're going to add and remove different tokens depending on market cap. So it's a involved process, but I think the readers will get a lot of insight from that view of the market.
We should take a amount of money and invest in that portfolio.
You can't. I mean, you can do that on chain already. There's index.
No, I mean your portfolio, the ICCI.
What?
Yeah, you're gonna have a list of tokens, the ICCI tokens.
Yeah, I mean, I guess it's nothing too complicated. That's pretty straightforward.
Is it gonna be market weighted? What's it gonna be weighted by?
That's what I'm still figuring out. That's what I'm modeling. So I don't have that many details yet, but I just think it's a useful thing to include, and so something to look out for.
All right, Bera chain. You talked about that. That's another one of these chains is trying to take the angle of let's let liquidity at the chain level have some impact on tokenomics.
To be honest, I'm not at liberty to discuss the details here. That was I included a very top level overview in the newsletter because it is something that's gaining traction. But in terms of a deep dive and explaining its system, I did not do that for you. But they have a very complicated token system, which it's very similar. At the chain level, people can direct emissions to different applications, similar to what Mode's going to be doing with the VE mode. And then they also have this kind of native stablecoin called Honey that benefits from this whole ecosystem.
It's called Honey?
Yeah, that's what the token is. So there's a Bera token, there's a Honey token, then there's a BGT, Bera governance token, I believe. And we'll leave a link if you want to look into this. And if you guys want a deep dive, I can definitely go into it. I just haven't, so I don't want to make stuff up, but I know this to be true. So all those things are happening, and I just think this is another example of like it's a adjacent level of innovation essentially, because you see all these blockchains like just trying to be faster, cheaper, like this parallelization narrative, like Monad, Say, and others, and then you have kind of Bera chain tinkering with token economics, token mechanics, and also branding with the bear and the theme blockchain.
Yes,
I don't know why you don't like that. I think that's fine. I like it.
It's fine.
No, it's fine.
It's fine.
Yeah, it's completely fine.
They have nice graphics.
Yeah,
it's
good.
fine. It's good.
And I think it's just an adjacent level of experimentation, because like the average person reads something from Monad, or Monad is good memes too, I guess, but it's just all technical about how they can do this many TPS. They have these technical characteristics, and that's good for onboarding devs. But an end user just sees a cute bear and they're going to go use the chain. So I don't know. I think that's cool.
All right. Well, I like it. You're like dropping alpha about the importance of Bera chain without dropping any alpha.
Yeah. Like you said, I mean,
wow. All right. Not at liberty to talk about it.
I'm not going to talk
that's
out.
Fine.
Yeah.
All right. Next. My favorite crypto company, Blackrock.
They're not a crypto company, sir.
All right. My favorite asset manager, also the world's largest asset manager. 2
crypto products.
It's all right. But they now are offering their tokenized Biddle, is that how you say it? Biddle product as another alternative stable coin on Athena. Is that how to look at it?
No, you said it wrong. That's wrong.
Okay.
So Biddle is a tokenized fund, and I think it just holds like treasuries and cash, basically.
Yes.
It's very simple. It doesn't hold that much. But you can hold this BlackRock fund as a token on Ethereum, which is very cool. So instead of just being in your brokerage account, it's already on Ethereum, and you can do stuff with it. Like you can send it to people, and there's very strict regulations. I'm sure it's very difficult to report this type of thing, and it's not enabled as collateral across all of DeFi like your typical token would be for regulatory reasons, but eventually it should be. But that's Biddle. And then Athena, which is basically, it's a project on Ethereum that offers a stablecoin backed by a delta neutral basis position. So basically what it does is it longs and shorts perpetual futures on DEXs and I guess centralized exchanges, and collects a yield there. So basically you can make a profit while collateralizing a stablecoin. So that's what Athena does generally. And now what they're doing is offering a new stablecoin, which doesn't do that, but it is a stablecoin that is backed by this Biddle fund and other stablecoins. So basically they want to do this because then in their treasury, they have some Biddle, which basically makes the whole protocol more sound. But I think it's cool that this is just an example of the BlackRock fund being incorporated into DeFi.
Absolutely. So, yeah. Very cool. Very cool. The Athena stuff is, I mean, that's geeky 5.0. That's like high level DeFi, TradFi come together for longing and shorting on these perpetual futures.
Yeah, well, it's just DeFi. It's just DeFi, but it's very complex financial activity for sure. Like it's financial engineering, 100%. So it's just confusing.
And it's doing well though. I mean, I thought this was maybe a prop up Athena play, but you assured me that Athena's done very well over both the bull and the bear that we've had here.
Yeah, no, they've done well. It's been a very profitable protocol, and they're doing well. This is just like a product extension.
Gotcha. Yeah. Okay. Next thing, and this is something that I saw. There's a tweet that the Superchain came out with that essentially, I'm going to pull it up here, talks about the way that any asset on any chain can be integrated into, any DeFi application. So the way they're presenting this is, let's see, share screen. The way they're presenting this is that, your application, be it, Ionics, one I use, Ironclad is one I use, can basically click on a button, which would be your wallet, and it'll show you all of your ETH, all of your USDC, all of your whatever on every chain of the Superchain. And you can pick whichever one you want on any chain to deposit into this application without doing bridging, without doing all that stuff.
Yeah.
Which I think is just, that's fantastic.
Yeah.
But they have that ability coming soon anyway.
Yeah, so they basically say here in the tweet that using a superchain will feel like using a single blockchain.
Yeah.
And basically the buzzword for this, the narrative here is chain abstraction is what this is called. So any technology, any development across any blockchain that's trying to do this sort of thing is called chain abstraction. The idea is you just have like a front end, and then behind the scenes you have no idea what chain is actually being used for your financial transactions. So I think that's pretty cool.
That's kind of embarrassing. Here, hold on a second. Let's decline that.
Yeah, so like I was saying, it basically just it abstracts the blockchain from the end user. So I think that's cool, and I'm not sure technically how they're doing this. I believe it's some form of shared sequencing, or at least that's the end game for the superchain. But yeah, I think that's really cool, and again, bullish on the superchain. I think the superchain of most of the ecosystems I've seen has very a tight alignment between Ethereum and the ecosystems and the individual blockchains themselves. They work very closely together.
Absolutely. Well, that's really cool. I mean, from the user perspective, my perspective as a newbie, it's like, oh, great. I don't need to worry about bridging.
Yeah.
So that's wonderful. All right. Next thing, and this is just something I came across. There's a kingdom or sultandom or something called Bhutan.
I think it's country.
Yeah, country. Okay. That basically now has 1/3 of their GDP stored in Bitcoin that they're mining themselves using their excess hydropower.
I didn't hear about this. That's kind of cool.
Very, very cool. I think they're in Nepal area, in the Himalayas, maybe.
That sounds right.
And a lot of rivers and stuff. So anyway, I think that's very interesting. I don't think that works at scale of the United States or the EU or any larger country, but there's something to be said for using this energy to, turn that energy into digital gold, just like you use fossil fuels to turn dirt into real gold. And places like Bhutan can do that and solidify, I guess, their economic standing. And I guess El Salvador is the other example of that, right?
Yeah. El Salvador is building a treasury. I think I'm not sure how they're purchasing it. I don't know if they're just going on like Coinbase and placing purchase orders. Yeah. No, I don't know. But yeah, that's really cool. I think this just goes, the thing that I think of whenever you bring this up is that just reinforces in my mind that Bitcoin is a global macroeconomic strategic asset. Like the average Joe probably should hold Bitcoin because it has these tailwinds in terms of demand from large countries. But they'll be like, what do I do with it? Like there's no utility here. But it's like the average person doesn't have utility for gold in their everyday life, but they might want to hold it in their portfolio or have it at their home for certain reasons. And Bitcoin's the same way. But for countries, it 100% has utility because it is this way to store value, to have this bearer asset, non-confiscatable from other countries, unlike foreign deposits and foreign banks. And it's very cheap to store. It's very cheap to transmit. And it makes a lot of sense for countries to hold on their balance sheet moving into farther into the 21st century and beyond. So I just want to reinforce that as my main takeaway from this, because I think a lot of people get caught up in Bitcoin. They're like, what is it? And they're not thinking from the perspective of a country. And that's actually how you have to think about the asset.
Just think of something, if I'm a country that has lots of energy, what if I said, well, I'm going to use this energy to make the world's largest Bitcoin mining farms?
Yeah.
I mean, there are countries in the Middle East now, Saudi Arabia, but they'd say, well, we're not going to export oil anymore. We're going to mine Bitcoin.
Yeah. They're doing a similar thing. Instead of mining Bitcoin, they're just making they're building infrastructure and having incentives for crypto builders to move there. They're diversifying their energy-based treasuries that they've built over the last 20 years into sports, media, entertainment, into crypto, into all these other things. So that's definitely one avenue there. I think if they diversify within that realm, that's a potential business model.
Yeah. In that part of the world, maybe Bitcoin is a little better accepted than these Western things like, media and sports.
Yeah, well, I was just saying, like, true, I guess, but they literally started the golf league that got bought by the PGA, and then they also like poached soccer player. They
have
who it was, but they poached soccer player for like $1 billion, and
so that's interesting. Related to that, and this was follow up of last week on energy. Read today, another nuclear reactor in Michigan is being recommissioned beginning in the end of 2025 with a $1.5 billion loan from the DOE. And just keep in mind, that's a loan. So they must be planning on making a lot of money back. Also, and you asked this question last week, the same reactor facility beginning in 2026 is going to start upgrading using the new modular nuclear power designs, where they can just stack reactors in there to add power as needed with much, much safer risk profiles, which is really cool.
Yeah, that's cool. I don't know much about that again, but I think that's good, and that's something we want to see for sure.
All right, now this isn't on here, so I'm going to put you on the spot. Okay. All right, my friend Evo Sham, I think is that I'm pronouncing it correctly? EVO_SHAM said that we need to do a segment called Nothingburger or Not.
Okay.
So I'm going to talk slowly, and while I talk slowly, you're going to think of 3 or 4 phrases, and you're going to tell me those, and I'm going to respond Nothingburger or Not. If it's a Nothingburger, it means I don't like it. If it's not, that means okay, I think there's something there.
What do you mean phrases?
Things, phrases, crypto-related things that you have an opinion on that you think I might. And if I think it's going to be a good thing, I'll say not. And if I think it's a bunch of hype, I'll say Nothingburger. And it's the only 2 answers I have. Do you think you can do that?
I guess I can. You should have just told me to prepare some topics.
Well, I just thought of it right now before we get to number 10.
Okay, that's fine. All right, let's just do.
All right, number 1. Are you ready?
Sure.
Go.
Crypto gaming.
Not. I think crypto gaming has a future in spite of my somewhat skeptical past. I am an old man that games, and if they can figure out a way to make the games I play crypto-centric, I would definitely use them.
Okay. Prediction markets, like Polymarket.
Oh, not.
You like prediction markets?
I like it's data. It's data science. It's not even crypto real. It's data science. People putting their money where their mouth is. I think prediction markets are a good thing.
Okay. Let's see.
There's one.
Solana.
Nothingburger.
Oh wow, that's a hot take.
That's a hot take. I mean, it's gonna be what, maybe half, a third, a quarter the size of Ethereum, but it's a Nothingburger to me. I'm sorry, Solana people, Frank Solana, whatever your name is. I'm sorry. I'm sure you're trying to make a good product. It just does not excite me. So I'm giving it a Nothingburger.
NFTs.
Nothingburger. Nothingburger.
No comment, no explanation,
comment. Just Nothingburger.
I
mean, some of them are kind of nice, but to me, they're Nothingburgers. I'm not into art. I'm not into that. I know some people are, but to me, it's a Nothingburger.
I will just leave you with the comment that 99% of the things that you own or like credentials that you hold in the digital world are non-fungible. And that's all it is. It's not art. It's just a non-fungible representation of something on a blockchain. That's it. I think NFTs, not as like a picture that you have on your computer, is going to be the thing, but the idea that NFTs are Nothingburger, I will disagree.
All right. Well, see, that just shows my ignorance of crypto, that I was thinking it's just a picture. That was my Nothingburger.
No, the words, it's non-fungible.
All right, then that's like all right, Ben, fine. You tricked me. Not.
I didn't trick you. That's the word. NFT, non-fungible token.
All right,
it is simply a token that is not fungible. Anymore.
There's one you're forgetting that does a softball question.
Meme coins?
Oh, that's a Nothingburger. Along those lines, though.
What?
What do we talk about every week on here?
I forget. I don't know.
Trump token.
Oh, it's his protocol?
Yeah, Nothingburger.
I disagree with you on that. Okay. I think that's going to, like, it depends what you mean by Nothingburger, at least. Like, it's 100% going to be, like, a focal point for the crypto industry. Like, what's going on? It's not a Nothingburger at all. Like, what's going on with Trump's crypto? Trump's crypto protocol just received $8 million in deposits upon Trump said something. Trump's protocol got hacked. Like, it'll be all over the place.
Well, we'll disagree on that. All right, that was good. I'm not going to ask you for any more. I appreciate you.
All right. Last thing. You think if say Trump wins, let's say wins, you don't think that the president of the United States' DeFi protocol is interesting or will garner attention?
It's not his DeFi protocol. It's his front end to Aave.
That's fine.
All right, it'll garner interest, but I don't think it's going to be a landslide money-making thing. I don't necessarily think its token in the long term is going to be anything different than any other I don't know, website front end, I guess is what it is. Maybe it helps Aave. That's not a Nothingburger.
So it's not nothing.
All right, it's not. It's a asterisk Nothingburger.
All right, whatever. Fair enough.
All right, well, that's all I have. Do you have anything else for this week?
Trying to think. Not really. Not really. I'm trying to think of other things I saw on Twitter. There was the biggest interesting things for me was the Nick Carter article. I recommend reading that. The Fed's comments, although I get kind of bored of macro takes quite quickly because it's, will the Fed cut? Will they not? How fast will it be? Look at what the futures markets are saying. This is what people think. And I said this in the newsletter, but I really just think that over in the medium term, the presidential election is the biggest driver of crypto prices in the medium term. And then over the long term, we just are bullish because of the long-term trend in monetary policy and the way things are going with crypto. So I think it's just not that interesting to talk about price action on like this medium time frame. Like if you're doing trading and you're trading over the short term, sure. But if you're more interested in analyzing protocols and the tech and long-term investment, it's just less interesting. And that's all I see people talking about half the time. So,
gotcha.
Yeah.
All right. Well, got a little late on this show, but I think we had another good show in. And next show next weekend will be our 20th, which is hard to believe.
Yeah.
So if you don't have anything else, I don't have anything else. It's good to see you, Internet Capitalists, and we'll see you next week.